In November 2022, one of the largest companies in the cryptocurrency industry collapsed almost overnight. Just days earlier, it had been valued at more than $32 billion. Millions of people trusted the platform with their money. Major investors believed they were backing the future of finance, and its founder had become one of the most famous entrepreneurs in the world. His name was Sam Bankman-Fried, but within a single week, his empire fell apart. Billions of dollars vanished, customers were locked out of their accounts, and the company that had once dominated the crypto industry filed for bankruptcy. This is the story of how FTX went from a $32 billion giant to one of the biggest financial collapses in modern history. Sam Bankman-Fried didn't look like a typical billionaire. He wore shorts and loose t-shirts to meetings. His hair was messy, and he often appeared relaxed, sometimes even playing video games during interviews. But behind that casual image was someone who understood financial markets extremely well. Before founding FTX, Sam worked at a trading firm called Jane Street. Jane Street specialized in complex trading strategies and high-speed financial markets. It was the kind of place where small price differences could generate millions of dollars in profit. There, Sam learned how to analyze markets, identify opportunities, and execute trades quickly. In 2017, he turned his attention to the rapidly growing world of cryptocurrency. At the time, crypto markets were chaotic. Prices could vary dramatically between different countries and exchanges. For example, Bitcoin might trade at one price in the United States, while in other markets it could trade thousands of dollars higher. Sam realized this difference created a powerful opportunity. He could buy Bitcoin cheaply in one market and sell it at a higher price somewhere else. This strategy became known as arbitrage trading. To pursue it, he founded a trading firm called Alameda Research. At first, Alameda was a small operation run by a group of young traders and programmers, but the profits came quickly. Crypto markets were inefficient, and Alameda was able to exploit those inefficiencies. Within a short time, the company was handling enormous trading volumes. But Sam had a bigger idea. Instead of only trading cryptocurrencies, he wanted to build a platform where millions of people could trade them. That platform would become FTX. FTX launched in 2019. From the beginning, the platform was designed to attract professional traders. It offered advanced trading tools that many competitors didn't have. The exchange grew quickly. Traders moved to the platform, volumes increased, and investors began to take notice. Some of the biggest venture capital firms in the world started funding the company. Hundreds of millions of dollars flowed into FTX. The company expanded aggressively. FTX opened offices around the world and signed sponsorship deals with major sports teams and brands. One of the most famous deals came in 2021 when FTX paid $135 million for the naming rights to the Miami Heat basketball arena. The building was renamed FTX Arena. Celebrity endorsements followed. NFL star Tom Brady promoted the platform. NBA champion Stephen Curry partnered with the company. FTX advertisements appeared everywhere. The company's visibility exploded. By early 2022, FTX had become one of the largest cryptocurrency exchanges in the world. Investors valued the company at $32 billion. Sam Bankman-Fried's personal fortune was estimated at over $20 billion. He was only 30 years old and now one of the richest people on the planet. But behind the scenes, the structure of the empire was far more fragile than it appeared. Sam's trading firm, Alameda Research, was deeply connected to FTX, much more than most investors realized. In theory, Alameda was simply another trading firm using the exchange. But later investigations suggested that Alameda had special privileges on the platform. It could borrow enormous amounts of money, and some of that money came from customer deposits held by FTX. Customers believed their funds were safely stored on the exchange, but some of those funds were being used to support Alameda's trading positions. As long as the crypto market continued rising, the system appeared to work. Prices were high, trading volumes were massive, and confidence in the platform remained strong. But the system depended on one fragile assumption: that trust in FTX would never break. In November 2022, that trust began to crack. A financial report revealed something alarming about Alameda Research. Much of the company's balance sheet depended on a cryptocurrency called FTT. FTT was a token created by FTX itself. Its value was closely tied to the success of the exchange. If the price of FTT dropped significantly, Alameda could face enormous losses. The report raised serious concerns across the crypto industry, and it caught the attention of Binance, one of FTX's biggest competitors. The CEO of Binance announced that his company planned to sell its entire position in FTT tokens. The announcement triggered panic. Investors began selling FTT. The price started falling rapidly, and customers began withdrawing money from FTX. Within just 48 hours, billions of dollars were pulled from the platform. Customers rushed to withdraw their funds. But FTX didn't have enough liquid assets to cover the withdrawals. The company had used customer deposits to support Alameda's trading operations, and once withdrawals accelerated, the problem became impossible to hide. FTX tried to secure emergency funding. There were even discussions about a possible acquisition by Binance. But after reviewing the company's financial situation, Binance walked away. The rescue attempt failed, and on November 11, 2022, FTX filed for bankruptcy. A company valued at $32 billion only months earlier had collapsed. Millions of customers were left wondering if they would ever recover their funds. Sam Bankman-Fried, once celebrated as a visionary entrepreneur, was arrested and charged with multiple counts of fraud. The empire was gone. If you enjoy stories about the biggest financial disasters and corporate mistakes in history, subscribe to Billion Dollar Mistakes, and let me know in the comments, which billion-dollar collapse should we explore next?